Hey everyone, welcome back to your channel name, the place where we talk all things money, finance, and building a brighter future. You know that feeling of security, of knowing you're set for life? That's what we're after, financial freedom. Today, we're diving into one of the most powerful tools for growing wealth: investing your money. Whether you're just getting started or looking to refine your strategy, this video will help you take that next step toward financial freedom. Let's get into it. Let's start with why investing is crucial. If you're keeping all your money in a savings account, guess what? You're losing purchasing power every year due to inflation. That's right, your money is literally shrinking. Think about it. What could you buy with $100 10 years ago? Now think about what that same $100 gets you today. It's less, isn't it? That's inflation eating away at your hard-earned cash. Investing, on the other hand, allows your money to grow over time, often outpacing inflation and actually putting more money in your pocket. It's like giving your money a raise. Think of it as planting a tree. The sooner you plant, the bigger it grows. The same goes for investing. The earlier you start, the more time your money has to compound and grow exponentially. And trust me, that compounding effect is powerful. We're not talking about getting rich quick schemes here. Those are risky and often lead to losing money. We're talking about building long-term wealth, the kind that gives you financial security and peace of mind. So, are you content with just saving your money and watching its value slowly erode? Or are you ready to take control of your finances and make your money work for you? Investing is the key. It's not just for the wealthy, it's for everyone who wants to build a better financial future for themselves. Remember, the goal is to have your money work harder for you than you work for it. That's the beauty of investing. Now let's break down the types of investments: stocks, bonds, real estate, and mutual funds and ETFs. Don't worry, these might sound intimidating, but we're going to break them down into simple terms. First up, stocks. When you buy stock, you're buying a piece of a company. You become a part owner, and as the company grows and becomes more profitable, so does your investment. Of course, there's risk involved, as with any investment. If the company doesn't do well, the value of your stock could go down. But over the long term, the stock market has historically trended upwards. Next, we have bonds. Think of these as loans to governments or companies. You lend them money and they promise to pay you back with interest. Bonds are generally considered less risky than stocks but offer lower returns. They're a good option for diversifying your portfolio and balancing out some of the risk that comes with stocks. Now let's talk about real estate. Everyone understands real estate, right? Owning property can generate income if you rent it out, or it can grow in value over time, allowing you to sell it for a profit. It's a tangible asset that can provide a sense of security. However, real estate requires a significant amount of capital to get started, and it's not as liquid as stocks or bonds. Finally, we have mutual funds and ETFs, or exchange-traded funds. These are perfect for beginners because they pool money from many investors to buy a diversified mix of assets like stocks and bonds. Think of it like a pre-built diversified portfolio. This diversification helps to reduce risk because, even if one investment performs poorly, others in the fund can offset those losses. Chapter 3. Taking the leap, your first investment awaits. Getting started with investing is simpler than you think, I promise. Remember when I first started, I was so intimidated. I thought it was only for Wall Street guys in fancy suits. But let me tell you, anyone can do this, and it's never too early or too late to start. Here's a step-by-step guide to get you going. First, set a goal. What are you saving for? Retirement? A down payment on a house? Maybe you just want to build wealth and achieve financial freedom. Having a clear goal in mind will keep you motivated and on track. Step 2, create a budget. You can't invest money you don't have, right? So, take a look at your income and expenses and see where you can cut back. Even if it's just a small amount each month, every little bit counts. Remember, consistency is key. Step 3, choose a platform. There are tons of investment platforms and brokerage accounts out there, but look for ones that are beginner-friendly and have low fees. We're trying to grow our money here, not give it all away to fees, right? Finally, start small. You don't need a ton of money to start investing. Even if you can only invest $10 or $20 a week, that's perfectly fine. The important thing is to develop the habit of investing regularly. Chapter 4. Investing like a pro: principles for long-term success. Alright, now that you understand the basics, let's dive into some key principles that will set you up for long-term investing success. These are the rules I live by, and they haven't steered me wrong yet. First and foremost, start early. Time is your best friend when it comes to investing. The sooner you start, the more time your money has to grow and compound. Even if you can only invest a small amount right now, it will make a huge difference in the long run. Next, diversify. Don't put all your eggs in one basket. Spread your investments across different sectors and asset classes. This helps to reduce risk because even if one investment doesn't perform well, others can offset those losses. Another crucial principle is to stay consistent. Investing is a marathon, not a sprint. There will be ups and downs in the market, but don't panic and sell everything when things get rough. Stay calm, stick to your plan, and keep adding to your portfolio regularly. Remember, slow and steady wins the race. Finally, do your research. Don't just blindly invest in something because someone else told you to. Take the time to educate yourself, read books, listen to podcasts, and understand the investments you're making. The more you know, the better equipped you'll be to make informed decisions. Chapter 5. Avoiding investment pitfalls. Don't make these mistakes. Alright, we've covered a lot of ground, but before we wrap up, let's talk about some common investing mistakes to avoid. These are mistakes I've made myself, and I'm here to help you avoid them. Mistake number 1, chasing quick gains. If it sounds too good to be true, it probably is. Remember, investing is a long game. Don't get caught up in the hype of get-rich-quick schemes or trying to time the market. Mistake number 2, emotional decisions. The market goes up and down. It's a roller coaster. Don't let your emotions dictate your investment decisions. When the market takes a dip, it can be tempting to panic and sell everything, but that's often the worst time to do so. Similarly, when the market is soaring, it's easy to get caught up in the excitement and make impulsive decisions. Stay calm, stick to your plan, and remember your long-term goals. Mistake number 3, neglecting fees. Some platforms charge high fees that can eat into your returns. Pay attention to expense ratios, trading fees, and any other hidden costs. Remember, even small fees can add up over time. And finally, mistake number 4, not having an emergency fund. Life happens, and unexpected expenses pop up. Before you start investing, make sure you have a solid emergency fund in place to cover 3 to 6 months of living expenses. This will prevent you from having to sell your investments at a loss if an unexpected event occurs. And there you have it, the basics of investing money and setting yourself on the path to financial freedom. Remember, the key to success is starting today, staying informed, and being patient. Time is your greatest asset, so don't waste it. What are you waiting for? Take control of your financial future now. You have the power to create the life you want, and it all starts with making smart financial decisions. Investing is one of the most powerful tools at your disposal, so use it wisely. If you found this video helpful, make sure to like, subscribe, and comment below with your biggest takeaway or any questions you have. Thanks for watching, and I'll see you in the next video.